passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. And you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 4-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
It's on the knife's edge. And what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have 3 bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farrell would never let me do that.
Well, Doug will be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying, why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning. We've been getting consistently. I am just wondering how much that forecast for a front-loaded or a back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in, so they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting, so we should all be very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe, but we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia, and we're fighting with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with 3 fronts ever?
Well, with 3 fronts on one side and then a home front with a question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of JP Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
do we
the
have a camera, or do we don't want to lose you, Emily, in all of this?
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
In case you missed it, on Bloomberg Surveillance. Reading economic data right now is like reading tarot cards, because right now it feels like you could pick out what you want and interpret it in whatever story that you wanted, and maybe it'll sound vaguely truthful for people and they will lean into it.
There's a science to it.
Tarot cards?
Tarot cards was like real deal.
Yeah, my son is a physicist, and he tells me economics is not a science. So,
well, I just think that it's a very choose your own adventure kind of moment. At what point do you know this data is reliable? Don't miss Bloomberg Surveillance live every weekday.
The Fed sort of stuck between a rock and a hard place.
The Fed is in risk management mode.
They're definitely going to be on hold.
On hold.
So the Fed is really on hold.
Remain on hold. The Fed won't cut.
I expect them to not do anything.
The Fed wants to be, quote, late to the game.
It makes sense for them to be on hold. They will continue to sit on their hands. They're going to upgrade inflation. They're going to downgrade growth. They'll continue to say we're being patient.
The FOMC is prioritizing inflation over the labor market.
Powell will probably say that he will continue to wait for clarity.
You probably are going to get a lot more wait and see, a lot more to learn.
The Fed is going to wait and wait and wait.
Such an intro. The riveting Fed Decides, the countdown to the Fed Decides on Bloomberg TV and radio is right now. I'm Lisa Abramowitz alongside Tom Keene. Jonathan Farrow is on a well-deserved week off. I will just say right now, markets kind of range bound as they assess all the potential risks in markets. They've come a long way, though, since the last Fed meeting on May 7th. You can see the S&P is almost 7% higher. Now it's up by almost 0.3%. Across the board, we have seen gains in the equity indexes, in part because of this. You have seen this expectation with yields higher across the board since May 7th, but not running away. And that has been one of the concerns. Do you end up with this yield premium that really becomes pernicious right now? Not so much, still up about 10 basis points, but the 10-year yield, 4.37%, I should say 10 basis points from the last Fed meeting. But oil, Tom, and this is, I think, what we're watching most closely. Oil prices materially higher since the last Fed meeting, up some 28% on the heels of what's going on.
There's a rule, and Bob will remember this from LIBOR OIS in 2007. You go 4 standard deviations, it matters. 2 days ago, Brent crude went 4 standard deviations within a very tight range. I don't want to say a lot about it other than we haven't hit 80 yet. People are modeling out hundreds. I don't have the name, I can't remember, but somebody modeled out a 1.5% hit to GDP with $100 oil. I don't want to be inflammatory on that other than it's moving up. It's part of the mix. I like the headline here moments ago. This, Powell could say this today. I'm cutting rates. I may do it. I may not do it. We may get that from Jerome Powell.
I'm guessing that that's not going to be the case. Joining us right now is Kathy Jones of Charles Schwab, who I'm sure agrees with me, and Bob Michael of JP Morgan is still with us. Kathy, thank you so much for being with us. How much is this Fed going to have to respond to what's going on with respect to oil prices, in addition to what we have already learned, both on tariffs or not, as well as the budget?
It's just another layer for the Fed. I mean, it's just like this layer cake that you just keep adding on one risk, one policy issue after another. So on top of tariffs, on top of the budget bill, on top of the multiple wars, now we're going to have energy prices as an input. And I think that this makes it even more complicated, and it was already really complicated to start with.
And part of this is the guessing of GDP. We were talking to Bob about it before, and whether it's a nominal GDP mystery of what inflation's going to do, or even real GDP. Do you get a sense that there's a real dispersion of wonderment about where real GDP is the end of the year, or dare I say out 12 months to Q2? It's next year's 2026. Is that right?
You got this.
Oh, we got the year now. I don't know that there's a lot of dispersion on expectations yet. I think we haven't even gotten to the end of the 90-day pause on tariffs, so we don't even know what the effective tariff rate is going to be longer term. So I think a lot of people are still modeling kind of a muddle along, not bad kind of GDP growth because consumers have hung in there. But I think as we get over the next couple of months, what we're probably going to find out is how's the labor market holding up, how's consumer spending therefore holding up, and what do all these policy changes have what impact are they going to have?
At a certain point, though, and I got to say, Bob, we do have some certainty. And this is something that I think people should recognize, that tariffs are going to be on, that you do have an economy, that yes, it is weakening, but it's not falling off a cliff. I mean, don't we have that base case? And then they have to give us some sort of scenario analysis for what they do with some kind of stagflationary type of situation?
And you've got the CBO out there scoring what the revenue from tariffs is, which, by the way, magically exactly matches what the 1 one big, beautiful bill act will spend over the next 10 years. So yeah, I think it's incumbent on the Fed to give us some answers this time. They have enough information. They can talk about what they use to model and then what the tail scenarios are.
We thank Neil Dutta for listening today with Renmac. Thank you for the note, Neil. And Neil just says, look, the consensus always is behind. They'll pencil in whatever and they'll be there after it happens. To me, what's missing here is the drama of the president, 2%. He wants 200 basis point drop. The drama of President Trump, I can do it down 100 beeps, down 200 beeps. What's wrong with a 25 beep cut? Multifamily housing's down 23% or something. The housing market's flat. Jobs are getting tense. Just go down 25 beeps and say, we'll look at it next meeting. Why can't they do that?
Well, they could, but there's all the uncertainty of what these big policies will look like. What will the bill going through Congress eventually look like? Where will tariffs settle? What will happen in the Middle East? They need a few more answers. And right now, everything looks okay. Most of the time, we would look at where the labor market is, where inflation is, where growth is, and say, we would take it 9 out of 10 times. So I think they're smart to just sit here, tell us that they believe policy rates are slightly restrictive, and then wait for an opportunity to bring them down.
Kathy, do you think they should weigh in more on the hawkish or the dovish side, considering the weakness that we're seeing in the economy in tandem with some of the inflation fears that have really abetted quite a bit?
Yeah, I think the problem with being too dovish right now is that there's a lag time between tariffs and when it might hit the price level. There's a lag time in so many of these things. Energy prices to be a lag time. And they are further from their target on inflation than they are from their mandate on unemployment. So if you remember last time, Powell said, we look at how far we are away from our targets and we set policy based on that. Well, they're further away on inflation than they are on unemployment. So that would argue not to be too dovish at this stage of the game.
Which raises the question, and this is something that John would be saying if he were here. He'd say sometimes you can learn more about how the market reacts than even the news itself. Joining us now is Greg Peters of PGIM. Greg, from that perspective, how much are you expecting the market to really want to hear a dovish message versus a more hawkish one when you take a look at longer term bond yields that are a little bit more controlled than they have been, but still nudgy?
Yeah, I mean, the bond market's been in a very volatile range for several years now. The market is clearly leaning more dovish. I think they're going to be sorely disappointed. I think the Fed is focused on inflation, and the market is, focused more on the growth side. What you're also seeing is kind of forward path of rates is baking in this new Fed regime, whatever that means. So, what does the Fed look like post Powell? And so the market is really skewed one-sided around rate cuts and the amount of rate cuts as you go out the curve. And I'm not sure the inflation dynamics or even the growth dynamics support that.
What do you see in the comparison of nominal to real yields in the bond market, Greg, right now? What's the dynamic? Just the last couple of days. Nominal, full faith in Christ.
Yeah, I mean, they're, just call
$1.20 since a week ago. I mean, go figure, it sounds like a bad business practice. I am curious, though, about how much they see the risk as inflation versus weaker growth. And that really is going to be the quagmire for the Fed.
Yeah, for the Fed, I think that is the what comes first, what's the order of magnitude of either one. That's what they're trying to assess. And that's why the consensus is they're on hold, because these things are still playing out. We still don't even have all the policies. It still has to finalize some of these policies that are conflicting in some ways. You know, they're gonna slow growth and they're gonna raise inflation. But then on the 6 months from now could go the other way. That's a really tough environment to set a policy.
You know, Bob, I find it interesting because you've come on the show and earlier in the year you talked about a sub 3% across the curve yield on 10 years, 2 years, and 30 years. That's obviously changed, and you have changed some of your outlook. But I wonder if it's based on some of the Sell America trade, if it's based on inflation, or if it's based on something related to just supply and demand having to do with yield term premium based on Washington, D.C. and that big, beautiful bill.
Well, I think there are a couple of things. One, tariff policy is far more aggressive than we originally thought it would be, and it's going to settle in above levels we had expected. The One Big Beautiful Bill Act, that came out to be much higher in terms of incremental spending than we had also assumed. And I think the combination of those things just made you pause and say, what's the Fed going to do? They're probably going to hold off. Greg mentioned that the rates market has been relatively volatile. We're taking the other side of it. It's remarkable to us how stable it's been. I'm surprised the 10-year Treasury isn't 5%. Fed funds is 4 3/8. It's been 4 3/8 for a while. We've already had half of the year go by, and one after another rate cut that was expected pulled off the board. So that's already happened, and the market's on board with a rate cut in December. You could take that off the board. I don't care. We're 4 3/8%. We've been there for a long time, but we see it because we have meetings every day with people looking to get into the bond market. I've not had a single meeting this year with anyone saying, oh, I've got to get out of the bond market. When do I get out? How do I get out? It's all about, is this the time to get in? Where should I go? About de-dollarization.
Greg, just quickly, final word from you.
No, I think of all the things that are going on, I think this Fed meeting is probably the least important, right? They are just reacting to, all the events that are unfolding that we're discussing and the uncertainty. So I think definitionally you'll see a Fed behind the curve. And I think there's no way to get around that fundamental fact.
Kathy Jones, Greg Peters, to both of you, thank you so much. This is the countdown to the Fed decides on Bloomberg TV and radio. We are just about a minute and 10 seconds away from that Fed decision.
Any dissent?
I don't know. I
don't think so.
I'm guessing that probably
Given the president on the lawn today, I don't. If I was dissenting against Jerome Powell today, he's under fire. I mean, they're coming out of the trenches after him.
And there's no reason for them to say that they should cut rates. The dissent will be expressed maybe in the dots, because we are going to be getting the dot plot, which I know they all love very much. All of a sudden, if you start to have people pulling dots off the base in terms of how many rate cuts this year and only one getting gamed out in those dots, how much does that really put the fire on Jay Powell?
We need James Bullard to come back and give us that lowball dot.
Yeah, well, he actually was thinking, he took the other side of that. We actually caught up with him earlier today, and he said that this is a Fed that should recognize more greatly the weakness in the U.S. economy, as evidenced by the downside surprises, as well as what we have seen with respect to the labor market and the housing market. Neil Dutta, that's just for you. Heading into that meeting, into that decision, we are staging a rally up about 1/3% for the S&P and NASDAQ. Russell 2000, more dependent on Fed easing, up almost 1%. Right now,
one cut. They do see one less cut than they had for next year. The biggest change to this statement is the balance of risks. Uncertainty about the economic outlook has diminished, it says, but remains elevated. In May, the committee said uncertainty had increased further and that the risks of higher unemployment and higher inflation have risen, a phrase that is dropped from the statement today. They also changed their labor market outlook to say unemployment remains low rather than May's stabilized at a low level in recent months. Labor market conditions remain solid, they say. The forecast sees only a slight increase in unemployment by the end of this year to 4.5% from their March forecast of 4.4%. Unemployment will remain at 4.5% next year. Inflation, however, is forecast to rise significantly. It will end this year at 3%, up from a 2.8% projection in March. Headline inflation was 2.1% last month. Core inflation will be 3.1% this year, up from a March forecast of 2.8%. Growth should slow, rising 1.4% this year. That is down from a projection of 1.7% in the March SEP. The neutral rate remains at 3%, though some members think it may fall in 2026. The decision was unanimous, so the bottom line basically is with fiscal policy, tariffs, and taxes still undecided, there is still too much uncertainty for officials to give a clear answer as to the path of how monetary policy will respond.
Mike, thank you so much. Great work as always. That's Michael McKee, our correspondent for economics. We're looking right now at a reaction in markets that is treating this as a dovish message. We are seeing a rally into bonds across the board, a sharp rally in the 2-year in particular, and that is extending into equities. What you're seeing is down almost 5 basis points for the 2-year yield, 3.9%, partly because of the dots, the idea that they are keeping 2 rate cuts getting priced in or gained out for the dots. That, I think, is the news of so far this statement.
Based on all my conversations, you're dead on. It's really important that they're gaming out 2 more rate cuts this year. There's a wide body of people that say, show me the evidence.
Joining us now, former Fed Vice Chair.
Of one of those cuts. So I think you read it well. It is a dovish lean from the committee.
Yo, madman in the building.
They took out 1 cut next year, but that's way down the road.
Sorry, guys,
so
my microphone still.
Even though they see more inflation than they did in March.
I look Richard Clare say Jeffrey Frankel at
What's
Harvard
going on?
years ago, saying we've got to go beyond the dual mandate. Within the
Man like Pete in the building.
Economics and what you did at the Fed.
Wow, we've actually got 900 people tuning in.
Things, employment.
I left you well. What's going on, brother?
Economic growth or side distractions.
Sound all good now. Amazing, amazing, amazing.
Those distractions.
What's going on, everyone?
For Jerome Powell.
They're saying it's a little bit dovish.
I think right now, look, the economy's in a pretty good place. The labor market is at or close to full employment. Inflation has been coming down this year. I think right now the third factor is the uncertainty about the tariffs, probably also on fiscal. I do think that if we had not had the overshoot in inflation in the last several years, then we would probably be already signaling a rate cut at this meeting. So I think there is some history dependence here as well, Tom.
Bob, what's your take on this in terms of what we were expecting, which is 1 rate cut getting priced in, one of them getting priced out, and what we did see, which is a sort of stagflationary mix of a downgrade to growth and an increase in inflation, but not as much as we were expecting. What's your take? Are you surprised?
I am surprised. I'm surprised they left in 2 cuts this year. Obviously, they're paying a lot of attention to the housing market and to the labor market. Both of those show signs of potentially cracking. Yeah,
President Trump weighing in earlier on the Fed today at a press conference. Take a listen to what he had to say.
Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people. So anyway, we should be 2 points lower.
Rich, how much do you think this is actually weighing on what we're
2
hearing,
points lower,
what
he's
we're potentially
calling for.
going to hear from Fed Chair Jay Powell later today? This idea that there are a lot of people in markets saying that rates should be lower, and you also have the president increasing the pressure.
I don't think it's so much. Look, Jay Powell has a lot of experience with criticism from the White House, and so I don't think that's going to be a factor.
Yeah, bro.
The math time here, Lisa said.
Yeah, I agree with you, man. The guy is just
I
unpredictable.
think it's a clarification, Bob Michael, that we talk about 2 rate cuts, and the president of the United States is talking about 8 rate cuts, 2 full percentage points. And we don't understand. He's talking about jumping down a point, like a real estate guy. What would happen to our world if we were so abrupt as to go halfway to 100 basis points, or all the way to a
He wants 8
presidential
rate
200
cuts.
basis point,
What a
8
chap.
rate cuts? What would happen?
You're betting on a number of things. The first thing you're betting on is that tariff policy would create a significant headwind to the U.S. economy, and businesses and households would just stop spending. So now you're creating a lower cost of funding for them to step in and start spending. You're also betting on the one.
What's going on, guys? Sorry about the sound issues. We've actually got a record number of views tonight. Unbelievable for a live stream. We've got about, what's that? Nearly 987 people, and that's absolutely huge. So while we wait for Jerome, so far the markets are reacting, of course, and they say it's a bit dovish, but we absolutely don't know which way it's going to go. All I know is inflation is sticky at the moment. That's what he's going to say. And he's going to say a bunch of other things that we expect. Labor market. We're going to talk about some good projects. We're going to then go back to the live to just see what his reaction is overall. That's what we're here for. We do understand the situation in Iran is going to have a big impact. Not many people know Iran was the second Muslim nation to recognize Israel. Of course, they have had relationships in the past, and regime change is what the people are calling for right now. That is going to tank us if a war happens. And why do I think that's going to be the worst case scenario for our bags? Well, before we actually do that, let's keep our focus on Bitcoin dominance. What we're really seeing now with Bitcoin dominance, guys, is the approach to the higher levels. And when I say the higher levels, I'm talking about the dreaded 70% level. And I talked about this in my video today, which kind of put emphasis on where Bitcoin dominance has been in the previous bull market. And actually, if you look at this whole entire range in the 70s, it would be very much the expectation that Bitcoin dominance, once again, comes up to this 73.3% level. It just has to. But if you look at 2017, that was huge. I mean, Bitcoin dominance had a fall of around 60%. I mean, you can see that. And until this moves, until this Bitcoin dominance actually shows a sign of weakness, not a sign of strength, a sign of weakness, let's just shelf let's forget about our alt season for a minute, right? Because this is when it's good to buy alts. Realistically, if you have the expectation that this Bitcoin dominance will absolutely drop like it has previously. Now, my expectation is in 2021, we dropped around 34% to the bottom. We could even say as low as kind of 38% level. But let's just take the 34%, which was around January 2022. Of course, we had November and September as really, really huge months here on the Bitcoin dominance. That means we can actually expect this rising wedge. And look how beautiful it's playing out, guys. It's a textbook rising wedge for Bitcoin dominance. You know, no matter what happens, even in this midline, you could actually see how it's going to play out eventually. So I would say be patient as much as you can. We're gonna go back to JP and the press conference, but before that, I just wanted to talk about the psychology of being in this market right now. It is absolutely the worst ever cycle, worst ever crypto run that I can remember. And you can look at big, you can look at big market cap quality projects. This is Beam, right? Look at Beam. And I know you're going to say, oh, okay, the gaming season hasn't really started and all of that. But let's have a look at one that had a good run. Let's have a look at Sui, right? Let's have a look at Sui USDT, right? So look at Sui now. For a very long time, it's just chopping here. And nothing happening. Had that massive pump, of course. This was the low. It had the massive pump. And if you look at the daily, you'll just see what the hell's going on. You're not really moving out of this range right now. And that's to be expected. This is why I'm telling people, fear less, just relax, try to accumulate as much as you can. Because what I understand, what's going to happen, honestly, in the next few months, I reckon we may even face a situation where we get a one last huge. In fact, I expect it. I don't think, or I don't reckon. I expect there to be one last dip of some kind, some black swan event that drives us, Bitcoin dominance and pushes up to this max pain level. I expect that. And what are we looking at in terms of percentage? I think there will be an increased percentage of about 8% to the Bitcoin dominance from the current level. And everyone's going to say, oh my God, this is rubbish. And, the bull market is over. It happens all the time. But if you're positioning yourself today, and I'm going to give you some very, very good projects, I'm going to give you some really good meme coins, because at the end of the day, if you haven't been part of the obvious narratives, the meme coins tend to be where massive, massive gains are made, while fundamental projects, large caps, they'll take a while to cook. So you're going to have to trade with a portion of your portfolio. The first one I would look at, if I was to buy a meme coin today at $16 million market cap, is Cocoro, right? This is absolutely shaping up to be, at the moment, the price has just been doing this. I expect another leg up from here. But the reason why I think Cocoro will be a very smart move on your part, especially to DCA and make solid gains, is there is a massive talk of a listing, right? This is the Nero playbook. We've been in it now since sub 10 million. And of course, I'm going to continue to hold this. There is that debate. Do you sell it into the HTX? Do you hold it a lot longer? What happens? And I said today in the Discord, I said, look, it got listed at $18 million market cap by HTX. Okay. Don't be surprised. If this is not, part of the manipulation you're seeing with the chart, it's a healthy chart, but it does actually, take one step forward and one step back and consolidates. And that's how it moves. That's typical of an exchange accumulation. Definite, and the links here are very much a very clear signals day after day. And why do I think meme coins will do really well? Well, first of all, this guy was right. Out of all his plays, I think SPX has done unbelievable. I mean, there was a talk of Murad, going up to 50 million with SPX in terms of his profits, then crashing back down to earth, all the way back from 50 million. Imagine the psychology for most people, right? To believe in something where you had $50 million and you crash all the way back to $3 million. It is exactly the same as if you've made a $10,000 profit and you came all the way down to, 1,000, right? Psychologically speaking, it has the same impact. So sometimes this is what I'm talking about. You've got to try and believe and buy the dips and get rid of all this nonsense. Your expectation for crypto to pump are governed by market makers. Market makers with the macro business cycle, they do their thing. Do you honestly ask yourself, you've got all these exchanges, you've got all of these big institutions coming into crypto and everyone's feeling bearish. But the game is harder. What to buy is a lot harder today than it was 5 years ago, 6 years ago. Crypto has changed forever, and the next cycle will only get tougher. But my point is this: if you have conviction in what you got, if you've got conviction in a bull cycle, if you think crypto is here, and all of these institutions will absolutely pump their bags, and that's what happens through the market makers, the exchanges, the institutions, the big wallets. Of course, they understand the psychology of retail, and they understand retail sells at a panic, and they buy the tops. That facts, that happens. When the market moves today, everything is green. Everyone's going to come and say, what do I buy? What do I get? And with something like this, I can honestly say there is no way these guys would actually post something like this frequently if they're not accumulating. There's no way. It doesn't happen. Why would they do that? So getting low is my point, and hold happy. Be happy for the red days. Let them nuke us. Yeah, they can't get rid of us. And that's where most people, honestly, like it is. I'm also incredibly frustrated. You know, I have my darkest moments. I just want to go and spend time with my family, chill out, you know, take care of my obligations in life. But sometimes it's literally good things come to those who wait. And if you understand, you're not going to have a run of any significance because Bitcoin dominance is on its way to 70%. Then you can actually be so much smarter with your money. And I have said all along, there's bags that I've been buying for 3.5 years. And there's stuff that I try to trade. Sometimes I get smoked, right? Whether it's leverage or whether it's kind of like spot trading. But we try. But the main thing to do, and I think a lot of you agree with me on this one, and if you do, smash a like, that the main thing is wait for the liquidity cycle, wait for the macro top for Bitcoin dominance. And the only thing that we need to worry about in the short term is the oil prices and the war that's actually been kind of priced in. And we've been in this war now. We're heading to the best part of half a week. You know, this Friday will mark the first 7 days of the Iran-Israel war. Market should be nuking way more. Look at that. You know, ask yourself, this week has given us FOMC, the war between Iran and Israel. And, you know, yes, we are down, but we're not out. And that's all I can say in terms of the, you know, buying things now when they are undervalued. Don't play with yourself. Don't stop. You know, if you get emotional, just go for a walk. You'll come back and you realize even with $1,000, you can do damage in the bull cycle. That's absolute facts. So I would definitely, like I said, you know, Cocoro right now is at what, 16.3 million. I would grab that. And the second meme coin that has done unbelievably well, that's actually been bought by smart wallets, is Zeus, Pepe's dog. Now, a lot of people owe me an apology when this dropped, right? When this had a tank, people were like, what's happening? And it just goes to show you today, I mean, as of today, it's up significantly. Exchange listings and smart wallets are actually buying this. You know, big up to Nansen.ai, who actually give me the opportunity to see a lot of these wallets that buy these big, you know, tokens in large. But Zeus coin, CCA, I think has proven itself, and it will get stronger. It will absolutely get stronger and stronger and stronger. And I think that is another meme coin that I would definitely buy. The next coin, the next one is more, I feel like this one is more of you know, this is probably the biggest moneymaker in all of these meme coins, right? This is JoJo. Now, JoJo is, I have to show you what JoJo is. I think some of you have seen my video, but JoJo is a concept that is slightly different. And again, people are talking about getting in early. This is at $450,000. Cocoro is at 16 million. CC8 Zeus is at 20 million or 21 million now. This can make, from the VIP entry, we're up. And we're going to diamond hand this. The team haven't actually started the marketing. They've got a really good team. This thing, would you believe, even has its own GitHub. It's got utility. I know there were a few comments left in my video saying, you were excited about this. Why wouldn't I be excited about this? And if obviously, so what? 400K, 450K market cap to 4 million. That's 10x. For the VIPs, I posted that at 111K. 1.1 million, that's a 10x. Where do you make 10x's that are relatively straightforward? This project hasn't even started marketing, and it's JoJo on Sol. And if anyone has any doubts, this would have been dumped straight away. Now, with the block of Pump.Fun, I believe BonkFun is going to have a massive, massive mind share. They already have the likes of Bonk and other useless coin that has done tremendously well. And this is all about the attention game. And hopefully the team, a Chad team, if I add, will get behind JoJo. And I think JoJo can do ridiculous numbers in this bull cycle. What else in terms of the other meme coins that I'm looking at, of course, and I'm buying in this dip, I always say low fee, regardless of the hack, regardless of what's happened, Sui is still going to be a major cryptocurrency, a major blockchain, a major layer one. And low fee, the Yeti is coming back to a level where we entered. I hope it does. I will buy a lot more. This is a very good buy zone for the Yeti. Yeti will be the #1 meme coin on the Sui blockchain. Of course, we knew that there was no rate cuts, and there was no rate cuts at all. So yeah, we just want to see what the temperature of Jerome is. And yeah, if you go back to JoJo, as brother is saying, JoJo is going to do numbers for different reasons. One, it has got a brilliant team. I talk to these guys and they're solid as hell. The other reason why JoJo will go to, I believe, multiple millions of dollars in terms of market cap, of course, it's quite funny. And I think once the team pushes the marketing, this is going to go nuts. So, yeah, I've just lost. Did I lose? Yeah, sorry, guys. So yeah, JoJo to the moon. I think JoJo does really, really well. And of course, we are going to bring you updates as JoJo grows. Hopefully, as many of you in this live chat can actually go to the socials of JoJo, can, help us raid JoJo as much as you can, share on Twitter, whatever. Go join the Telegram group. It's a lot of fun there. And of course, this is going to be a meme coin that I think I'm going to hold at least from the embryonic stage to the higher market caps for sure. So yeah, JoJo will do very well. That's why I accumulated just took. Yeah, what's up, Joey? Hope you're well. Absolutely, bro. It is absolutely inconceivable for people to have access to all this data and not at least look away. You've got to do Ronaldinho here. You've got to do the look away passes, because this stuff, honestly, I'm in crypto 18 hours a day, and sometimes I hate it because you've got to balance all of these emotions, but people aren't just reading what's going on. So if you bought, I'll give you an example. It doesn't matter if you bought last week or if you buy this week, because overall your average will be way, way, way down overall. because what we're expecting is at least for these projects to run 5, 10, 15, 20x's. Okay. And yeah, JoJo, so in terms of the, let me just have a look. Yeah, they're going to keep, of course, the rate the same. I'm going to check something else, guys. Let's go and look at the, okay. What are we scared of? So what happens is inflation. So last month we had a really, really good CPI, guys. And of course, you know, that was a lot better than expected. It was a lot cooler. Anyway, the markets reacted and started to do really well. But if oil prices keep going up, like I keep saying, then that's where I think the main issue will be for us. Rumors are Crypto God John is buying Previx. I wouldn't be surprised because the market cap has been doing rather well. The chart looks absolutely delicious. And again, you know, my brother Pete was super early. You posted this into the group. Appreciate that, bro, because this has been one of the, you know, I grabbed a little bit of it. It's still relatively small in terms of market cap. So if he's gonna buy more, if he's buying more or gonna buy more right now, 7 million. I mean, it was only, I think, 2 days ago when we were talking about this as a, what was it then? I think $3 million market cap. And it's shot up now, 7 million. And I think the good thing about this is the utility is incredible. You can see here the prices. I mean, Pete, this is what I love about our group. Guys, if you're not in our VIP group, I don't think you're living. You know, we have an amazing time. All this time, Pete has been talking about this project. And no doubt, of course, it grabs more attention. Now, look at the buys, you know, $2,000 here, healthy buys coming in. But this is one, you know, thanks to my brother, has been posted it. Yeah, exactly. I remember from the DGen channel into our chat. And again, you know, that's what you want. You know, you want to build conviction over a long period of time, bro. That was a fantastic call. And again, Pete is our resident bad boy, our chart expert, our great brother amongst many brothers. And yeah, thank you for giving us this one, man. My kind of small bag here has been having its own bull run. And for those of you who don't actually know what this is, let me just give you a quick presentation of the website. So EVM compatible blockchain designed to prioritize privacy, security, and anonymity. So what you need to do is, if it's pumping today, of course, going into price discovery, you just need a little pullback. But think about how, you know, again, you know, privacy until they clamp it down, because I think privacy will come under pressure at some point as these guys start to rug us. But we're now heading over to the Sky Sports Studio with Dama Chef. That's a specific joke for one of my brothers, man. Big up yourself if you know Dama Chef. Jerome Powell is not up yet. We will look at the way he he impacts the charts. You know what, guys? Previx. You know, I have another gem that is. So one of the problem is, because I'm using Nansen.ai and I'm tracking certain wallets, I get to see what rotation happens between, you know, when a project runs to $1 billion market cap, some of those wallets, in one particular project anyway, the wallets have now switched on to a brand new project. And I will, once I dot the I's, cross the T's, because, you know, this game is dangerous. As a influencer, I have to, or as a community leader, I have to make sure, you know, we've been rugged too many times. So, you know, that has to be done. But well done on everyone at the DXB, courtesy of obviously Crypto Pete, who is eating absolutely healthy, you know, less carbs. Oh, yeah, we'll go back to the Sky Sports Studios.
Down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored.
I think the question and
Our
answers will be
success in delivering
brutal.
on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effective tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjust it over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So, and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April after the March meeting that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over.
Ask him about Trump.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber, Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. And that's the best thing we can do for the housing market. You asked about the job market, again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that
Peace and love to you, bro. This is absolutely important. In fact, Bitcoin dominance dropping. Look at Bitcoin dominance playing. Crypto is not reacting, guys. Okay, we're seeing Bitcoin starting to react now. Let's go to the lower time frames here. There's no TV audio, guys. Oh, okay. Let's go back to TV audience. Sorry, you're not hearing Jerome anymore, right? Because I'll switch to. Yeah, let me just switch over to this. I'm going to have to switch to this.
So we'll make smarter and better decisions.
Can you hear it now?
Just wait a couple of months or however long it takes to get a sense of
Negative.
really
All right,
what is going
muted.
to be the pass-through of
Cool,
inflation and what's going to be the effects on spending and on hiring and all those
Can
things.
you hear him now?
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults.
Yeah, this
in
is
your
going to be
direction.
interesting.
And I'm wondering, given now that the
Yeah,
Supreme
thanks,
Court
bro.
has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about the outlook for the economy.
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned to right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids.
So anyway, guys, there you go. They asked him about Trump. He shrugged it off. It is absolutely nothing has changed. In fact, if you look at the overall, as Muzzy was saying there, the overall crypto market is still very much the same, which means it's already priced in, right? It's already priced in. None of that matters. What really matters now is how far they escalate the war. and whether that causes a bottoming event. So yeah, it's it's something we knew, and we talked about this anyway. If you look at my previous post, that explains everything really as it is. Bitcoin dominance is incredibly volatile, but right now it's not it's not the time to drop. As I will come to your comments, of course, as we navigate the rest of this week and turn our attentions to other matters that matter to our bags, buying, what to buy, accumulating. And this is such a beautiful. So first of all, let me big up my brothers. Of course, the whole community is here, and I recognize everyone. And so yeah, let me pick up first of all, Mahindra. Amazing comment today, and I saw Pete's response to you in the Discord, brother. That was such a beautiful thing, and of course, we will help each other as much as we can, bro. But thank you to all of you who are helping each other loudly and clearly as you can, as you do in the as you do every day. And I couldn't have done it without the group. And again, I want to turn my attention, big up to my brother Madman here. Unbelievable, what a top guy. Again, we are kind of like, I think we're all similar temperament now. We've built a group that is reflective of who we are as people. And despite the mistakes that we make in crypto, man, it's good to be part of a solid community as Bitcoin dominance plays with our emotions on the 3-minute time frame here. Ultimately, this is where I'll kind of have my eyes glued to this, because this is going to be very important over the next few months. But anyway, peace to you, brother. This is, again, this is what I'm talking about in terms of the family and how we feel to navigate the crypto cycle from here till the end. I'll go back to a comment said by Marcier. Barely any reaction. If anything, you could see here, Bitcoin has started to come down a bit. You could see now, obviously, they have started to offload this a little bit, but we still have, typically Bitcoin does move like this on FOMC night. Pump into it and then dump into it, or pump into it and then as Jerome speaks, you kind of like sell the news and we are back down. But we're still going to monitor this. Of course, we've got several levels of support from here. And whilst let me just put something on here. Look at some tokens. And again, of course, Jerome says a lot and nothing at the same time. Another nothing, but what's going on to market manipulation. Absolutely, bro. Riemann in the building as well. Big up yourself, bro. Yeah, guys, don't forget to subscribe, of course. And you can see Bitcoin now 103,691, 103,691. The bubbles are live as well. Crypto is coming down a little bit. Aerodrome's had a fantastic week, of course. If anyone doesn't know what's going on with Aerodrome, of course, base pay has integrated into tons of, I think, USDC. That was the big news. So yeah, it should do really well for the rest of the cycle. Widow Black, we're playing. Yeah, it's mad. I mean, the hourly, you can see, of course, markets pulling back. But again, there was a report today that I shared. Actually, it was part of my video, not the report. On those integration to these markets, Global Alliance, the Solana ETFs, So a lot of meme coins will go absolutely ballistic, possibly next month, because of the spot ETF announcement that is 73% in the works. That is likely to play out. So yeah, get yourself some Solana, low cap Solana meme coins. I'm not advocating you go and spend a lot of money, but even some of the big ones like your WIFs, like your fart coins, all of those that we trade. As Pete would say, let's ride that wave. The fart coin wave was an unbelievable thing during the dip. So that's something we can look at. It's triple swap should be a good as well with Aerodrome. Absolutely, bro. Absolutely. Good question coming here from Pratik. Do you expect summer chop sideways market unless we get rate cuts? Summers have always been dry for crypto. I said pretty good question, brother. And I have already got an answer for you. I've done extensive kind of what I call an emotional control for myself and for the community. And through one of my posts, I think I kind of nailed it in my own thesis, what's going to happen during the summer. So if we take everything out, where did I go? So there's a couple of things we have to remember. So it's always good to look back on what we said before going into a major event like this. And a few days ago, I posted this in our Discord, and so we pretty much said there's no change in rate cuts. I'm not expecting a rate cut before September, and the rate cuts priced in for this year are 2. So the market is looking at 2 rate cuts, September and December. Many analysts believe we may just only get 1 and get the other one Q1 2026. Now, here's different thesis. Because nobody knows, nobody has one answer for this. Sorry, I just saw a comment that threw me off. I need to get rid of that comment, man. That's mental. Anyway, so Middle East on fire. In my video today, I talked about how a U.S. frigate group has now come into the Arabian Sea and the Persian Gulf. So that could be, we still need to see the impacts of the war. Now, beyond that, I'm also looking at Iran sitting on 13% of global oil. 13%. Now, what happened before when we had previous conflicts? So again, guys, when we I'm going to ban that person, man. What is this pizza? Yeah. Anyway, let me get my train of thought. During the Russia's invasion of Ukraine, oil went from 90 to 130. Now, oil prices will kill us, in a very quick time, and then things will come back. And of course, that's going to leak into the CPI. So, in order to answer your question, what do I expect in the summer? Largely now, we know what the Fed is doing. We know there's obviously there's clarity. I love you now because you know anything about new King Von Dread. I know King Von. The fact that you've mentioned him, Tisha, I've got a lot of time for you. Yeah, are you from O Block? Anyway, let's continue, guys. So for oil prices, so Pratik, if oil prices at the moment around that $73, $74, $75. If the war continues, I am expecting that to have an impact on the next CPI reading. I'm definitely expecting that. If, of course, nothing happens and they come to an agreement, I do believe we'll get a nice pump. Either way, psychologically, I'm not even positioning for that. I'm here for the long term, long haul, and that's exactly where I want to place the energy. So this is why I love discussing these kind of these reports and researches that we do in the Discord, because it's very important. If someone doesn't know what's going on and they're just looking at rate cuts because the media told them about rate cuts, and they're not taking it into other factors into consideration, then your hopes are you're still going to wait for your pumps. But one thing I've learned over the years in crypto is, expect the worst, play with the worst, live through the worst, and the short time that we get the markets running, honestly, you're going to just feel you're going to be a millionaire or whatever your target is, because you've actually been accumulating, and Bitcoin dominance is high, therefore altcoins are cheap, and you're DCAing and you're saying, look, I've been buying, I don't know, I've been stretching 10,000 Ondo for the last 12 months. I've got to 10,000. I've got this meme coin. I've got this gaming coin, if that makes sense. So it's a very good question. Summer has always been shit, but Ethereum is flirting to do something. And Ethereum, generally speaking, it does tend to have good summers, right? So while I don't believe that this is the time to be planning, we are in the summer now. June's coming to an end. 2.5 weeks into June. It's the end of June. And so as a result, I do believe that this is what's going to happen. And the Fed, of course, September, December, and that is one of my theses. The other thesis is a lot more detailed, but it's going to help you, because I actually put this down. When did I post this one? Trump Powell, market mindset. I think this was the one. So, so rate cuts, forget it. What the Fed wants to do, market implications, hawkish. So we've passed all of this right now, but where we're at. So strategy reminder, trade smart when you can. Honestly, throughout the summer, if you are, say, for example, we were talking about Prefix or any other token that you're up significantly on, take profits. And then focus on your quality, whatever that means to you, and just be patient. Just be patient, because I think the impatience is what really kills us. So there are a couple of different things that we've got to look at. But so far, Bitcoin is saying, okay, bring it on. Yeah, you know what? Tisha, I don't even know how you found me. I'm on Chicago scene 88. And what was the line from 64th to 65th? We're not from 63rd. Even though I love, that whole Chicago. It's a tragedy, man. I don't want to go into Chicago politics, but I am a bit of a connoisseur. Chicago scene 88 helps me sleep, however sad that is. Big up Tisha, man. Tisha wants me to do drill music updates. Should we expect unemployment to rise in the recent... Oh, man. I got dropped on the flexing J Powell. He's from Tennessee. Yeah, absolutely, man. Love it, man. We got people. Listen, tonight we've gone as far as Chicago, guys. So that's what's up. We'll go back to, we'll live 63rd for a minute. This is a more important question. Not financial advice. I got Aerodrome at 61, up 20%. Would you take profit on a $700 and rotate it into Cocoro? It really depends, bro. Like, Yeah, I mean, for me, it's kind of like because it's a larger cap, and $700 will probably do more, but more risky on a lower cap, right? So yeah, if you've made that 20%, beautiful, bro. Go for it. At the end of the day, we've got to take risks in the market, and I can't tell you, if I've got conviction in something, you know what my answer is, and it is financial advice. That's what I would do. If you're going to put, say, I don't know, $5,000, $3,000, $10,000 into Aerodrome, it probably makes more sense for me to be able to do that. Of course, you can always, the lower the market cap, the more risky it is. You've got, yeah, I would do that. Why not? Treble swap will do well. It should do good, as well as Aerodrome. Yeah, Aerodrome is a beast, bro, and triple swap should also do well. I agree with you. I have been farming base, and the way they support developers right now is pretty insane. Guys, what you're looking at is the price of Bitcoin on the 3-minute time frame during FOMC, almost sitting at 104. We've answered that one. Guys, smash the like. We've got a record-breaking audience tonight. Absolutely insane. Any other questions that we haven't looked at? I have no idea what your comment is, but you want to type it again. Yeah, just type it again, bro. I don't know what your comment is. Pump Fund is launching its own coin, bullish or bearish, for Solana meme coin trenches. Bro, I can never say Pump Fund is bullish for crypto. I don't care if they launch that. We might make money. Beggars can't be choosers right now. But I hate the whole movement. There was a guy who committed suicide live on the, not that's important anyway, but it's just the trench is the worst of its kind. I do believe that there's other quality launch pads. But there has to be, they have to raise the barrier, man. This low barrier to entry for these meme coins is just ridiculous. It's ridiculous. So, yeah, I hate Pump.Fund, man. They got banned from X. You saw that whole drama. For me, it's kind of like the trenches are good, but to a limit. They can be very detrimental as well at the same time. So yeah, F those. Let's focus on quality projects. I do hold SBET on Ethereum. Now, this is an interesting one because it came out of the blocks. That the wallet that had the 10 million USDT in stables is still accumulating heavily. Last time I checked, kind of Joseph Lubin's coming around to the idea of their existence, and he has apologized for what he said, because he called it a scam. But this is where it gets interesting. So what they've done is they've partnered with, or they are going to partner with Crypto Casino. Again, guys, this is risky. So this could either do an SPX or, do nothing. But so far, it's coming back to life slowly. And what I would say is Crypto Casino is partially owned. Yeah, Crypto Casino is partially owned by SBET, the company. So Sharplink Gaming acquires 10% equity stake in Armchair Enterprises, owner of CryptoCasino.com, $500,000 cash. And what they've done is they have now partnered with SBET, or they are going to partner with SBET. And that would be at the blessing of Sharplink the stock. So watch out for this space. Don't go nuts on it, but just keep watching out for this meme coin, which is what it is. And it's meant to be like a GME or kind of like a GME and the parody, it could do something. It really could do something. Which altcoins are you bullish on right now? I don't think my bullish list has ever changed. Let me have a look. This one's a trade. So let's take this out. Let's take Kita out for now, or let's just hide it. Layer ones. Kaspa, Sui, Say, Arweave. Arweave is a specialized layer one in Deepin. Sui, I think Say is kind of small. It's a good bet. And you could almost argue that could be a good choice. Small caps. Owl's Peak. You could look at other layer ones, potentially other smaller layer ones. All right. AI, Tau. You've got Tau Cookie. AO the computer. I think that whole Arweave ecosystem is mental. And right now, let me just change the risk factor here. AI tech here, of course, noise, which is SocialFi. It's down 80% in a week, right? But I'm still bullish on the narrative. I think if they announce the X integration, I think that's going to be ridiculously good. Gaming Beam, Prime, Car, Marvia, that doesn't change. RWA, I think I'm going to do numbers with XLR, Ondo, and of course, Pinlink is just outside of that, fully diluted, 100 million tokens. Alex Becker is going to shill it. And then there's others as well, so I don't have everything here. And then in terms of DeFi, Aerodrome is probably my biggest DeFi bag, followed by CTES. But, of course, I do hold Navi, Scallop, and Bluefin. And then meme coins, I would put JoJo right here, right now. Now, Foxy is an interesting one because consensus haven't really pushed the marketing yet. Yeah, sorry, brother. July 8th will be the expiration of the tariffs. Do you expect the market to fall at that time? They'll strike a deal. So that one incident alone, it just really depends on how Trump pushes the tariffs narrative. Yeah, I gave you the whole list, brother. I gave you the whole list. Meme coins, I can repeat it for you again. Cocoro, Lofi, Toshi, Foxy, Cockinu, and of course, JoJo. I do have another meme coin that I'm working on, but it has to on Ethereum, and I think that one's going to be a hit. So, in all due course, I'll reveal what that one is. And yeah, it's right now, it's just Incredible. Happy days, good times. We should be, to be honest, we should be looking for opportunities in a market like this. By the time I update all of these market caps, for example, if you look at Beam's market cap, it's 200 and, just as an example of where it was last week, 230 million, 270 million. And at the time of, updating that list, it was over 300 million. So you can see that value's coming down. Arweave is another one. That's an example here. 428 million, right? A few days ago, it was, today it is, what is it? 347 million. So you're seeing how violent these market caps change over a short space of time, improving our average entry, allowing us to make more money. Yeah, Hippo and Stewie. Once upon a time, I did like it, bro. And the reason why I don't have it anymore, I don't have it on my radar anymore, because I believe Lofi has flipped it. $17 million market cap. The volume is probably one of the best, if not the best, on the meme coins. I have to give them that. Their trading volume is just always ridiculous. So right now, actually, contrary to, 17 million is actually better than a lot of billion-dollar layer ones, or $500 million layer ones right now. So it could be a good time to bid on this, actually. It's come back down to what, $18 million market cap? It's 1-to-1, like literally $17 million volume, $18 million fully diluted. It's 1-to-1. Oh, I love you too, bro. Much love. Collab Peter, man. Hey, listen, we might have to big up the business for him, man. Let me know, bro. Anywhere we can help local businesses, free my boy from Collab Peter. Bro, we can help. Listen, tell him to send us a logo. We'll feature you on the show. I'm all about helping people, man, local businesses. But yeah, much love, bro. Yeah, Hippo's on better exchanges compared to Lofi. I think Lofi is so. My conviction came at the recent Sui Foundation gathering, the Miston Labs gathering. That's when it became really, really obvious how well Sui work together. But listen, Hippie for sure, volume and market cap, it looks very, very, and they've always had the volume. So I do agree with you. I'm not telling you that coin is shit for sure, bro. Like it's price has depreciated, but so has the whole market. All right, let me listen. Let's have a look. It's actually a real pizza shop. Jeez. Oh my days. I can't believe this. Big up Kulad Pizza, man. The only influencer out here promoting local businesses. You know what I mean? Let me just show you. Yo. Sorry, guys. I'm super excited about this thing, man. Cool-eyed pizza's a real thing, bruv. Holy crap. And I think that, you know what? They're based out of O Block as well. Based in 63rd, man. Nah, I'm a bit more old school for drill music. Honestly, I'm literally, you know, I'm coming from that Biggie and Tupac era. The Commission, Uncle Paulie, P. Diddy, Cesar De Janeiro, Charlie Baltimore, Iceberg Slim. These are all meme coins, by the way, guys. Is it? Oh my days, bro! I thought it was in Chicago. Is it in India? Oh, bro, that is, man. I'm gonna big up Cool-eyed Pizza. You can find them in all of the famous Indian streets. Because I'm just coming back from, to be honest, you know, I just came back from Mumbai. My last trip was to Mumbai, and I loved it, man. Every single morning, I go down in the, you know, for breakfast, and I just couldn't get enough of these dosas, bro. Like, you know, it's basically like a light crepe / a pancake. And what you do is you can actually do it with like eggs and all kinds of madness. So big up. If you haven't had dosa, go and try some, man. Yeah, man. Big up Cool-eyed Pizza, man. It looks delicious. maybe we'll go there together next time, bro. So, guys, going back to these altcoins. So, yeah, later ones, I think Sui is a no-brainer. I think Kaspa is still undervalued. The thing with Kaspa is it doesn't do well when there's war. Rafa, big up. Listen, hey, NYC, man, you've got, you know, the best pizza in the world, arguably. So, yeah, man, let me know your favorite pizza place, guys. This is absolutely hilarious tonight, man. You know what I mean? Man's going to get a slice. But later on, guys, I still believe, I mean, the thing with Kaspa, people don't actually know from 2022 till recently. I mean, it's done about 1,000x off the bottoms. And whenever there's war, I guarantee you, Kaspa dumps hard. Like literally, it doesn't cope with these events. And I don't think, you know, it's a coincidence that it's done its best. I mean, last year, September 2024, Cash was riding at 20 cents, and Crypto Galaxy was like, get in now. Eat the dips, bro. Yo, man needs a... Yeah, listen, you know, if Cool-eyed is watching, you know what I mean? I might end up opening one in O Block, bruv. You know what I mean? One of these little grimy places, man. That would be so... Pratik goes, eat the dips. Hey, Papa Jones, man. No, but to be honest, you know, if I, especially back in the UK, a Pizza Hut is not really where you want to be. What you want to do is do Domino's. What was it? Double pizza on a Tuesday or something. Oh, mate. Domino's UK was something else. And we're not talking about fine dining. I mean, we have it here as well, but it's some next level. So maybe we should have a pizza day, man. You know what I mean? A real genuine pizza day. So yeah, the problem with Kaspa is Kaspa and Conflict does not go together because people are always brand associated. Now, considering this is my largest layer one, and I have been a loyal customer since these days. You know, Kaspa was born on Reddit, and then this is happening now. So while I appreciate my entry is generational, there is a level, again, what Kaspa probably needs to do is show a big TVL here, launch the, and once that happens, I think it will do very well. Once you start comparing Kaspa to the other layer ones, because you can actually go and track the TVL on Dune Analytics or DeFi Llama because of the smart contracts, I think Kaspa will do well. But for now, we just have to wait for that those smart contracts so they can build DeFi protocols and shitcoins and all of that. On the other hand, if you look at Zeus TVL, 1.7 bill, down nearly 2% over the last 24 hours. I've been kind of impressed with Hadil protocol. Why? Because it has a very small market cap at 158 million in TVL. Now, the good thing about this one is between Navi Protocol, Bluefin, and CETAs, it doesn't have any unlocks until October of significance. So market cap 23 million, fully diluted 122, TVL 158. Right? They're beta bakers and beta neuro. Big shout out. That's in the Netherlands. If anyone's hungry right now in Amsterdam, head over to the Pizza Backers and Pizza Palniro. I hope I'm saying that right. Of course, Pizza Day collab all day long. So yeah, going back to the show, Sui TVL and Sui DeFi protocols would do really well. I think there's a lot that's been taken away from CETAs. And some people will either say, okay, CETAs was a regret because we missed the bottom, or CETAs might actually stop growing from here. The TVL is actually going back up, $80 million. And of course, it's lost over, what is it, 67% over the last 1 month change. Good to see Turbo's finance growing, at least 78% change in the last 1 month. Still relatively small anyway. Market cap here is absolutely tiny. So that's what's on Sui. I did actually publish, before I leave here, let me just show you something else. The Say TVL is an interesting one. Because while the TVL is growing, $500 million, just under, the market cap of Say is relatively stagnant. And of course, the price of Say, so right now, Say is under, what is this? Yeah, the 17 cents, 900 million. And of course, FDB is 1.6 billion. So when we talk about the rotation, they'll come from Bitcoin. BlackRock has already started to rotate into Ethereum. Then they'll go to the large caps, your AVAXs, your Suis, your Solanas, XRPs, and all of those. Then they'll come down to this other midsection. For the big whales, $1 billion is not, it's an okay market cap for them. In fact, most of the whales become interested. They all become interested around 100 million on the micro caps. So yeah, expect some kind of rotation, but it does actually have a growing TVL. Now, the biggest protocols, so say it's the DEX, and a lot of this is DeFi. But I have published a list of meme coins that I think will do relatively well, or at least run would say. And then if we look at shall we look at Sonic? So you can see Say's going head to head with Sonic, similar market cap. The difference here is it's fully diluted, right? Because this is Phantom basically. So right now it's got a similar TVL, slightly bigger market cap, but Sonic has fully diluted market cap. Built. Yeah, it is very much underrated. It's also on Binance. Liquidity will find that, and no unlocks until November. Ravi said, too many layer ones. Can you tell me? There you go, brother. So you have Kaspa, Sui, Say Sonic, Arweave. But also, you've got to consider the size of your investment, entry. You know, there's different dynamics there, right? So there's different dynamics there. But of course, it kind of really depends how much you want to put in, what you're looking at. You know, Tao's a layer one, right? But it's not general purpose. It's AI. Arweave is a layer one, but it's a deep in layer one. That makes sense. Sui is general purpose. Kaspa is general purpose, or at the moment it's just peer-to-peer payments. But with the smart contracts, it will have DeFi, you know, shit coins and all types of stuff built on top of it. So you're in a good, actually, you're probably in a very good time in these tough times to be able to do the full research, narrow it down to a low cap. You know, you don't have to have a, you know, mid cap, high, you know, high, low, and mid. You just pick up one or two good layer ones that fit what you're looking for. And these are relatively safe as well. But if you wanted to get layer ones, what you can do is always, also you can look at market caps as well. You know, these are the general normie layer ones. But in terms of the overall layer ones, you've got different market caps. You've actually got, you know, layer ones make about 2.7 billion of the whole market cap. They haven't done as well recently. You can see layer ones have been relatively suppressed, but in a proper bull market, they are some of the best. You can imagine, you know, I never thought Sui would be larger than Avalanche, but it is. The top 100. Tao's at 3 billion. Did we skip those? See how small Kaspa is getting now, ranked 56, 1.8 billion. Still got healthy 85 billion market, 85 million in terms of the trading volume. Sonic is an interesting one. Similar volume to Kaspa, smaller market cap. And then you got your stay here, 900 million. What else would I be interested here? I love Arweave. I think Arweave is going to have an explosive run. You know, Kita has done tremendously well. I mean, I posted that between 6 to 9 cents was my buy levels for KTA. It's already printed. Then obviously outside of that, smaller ones. Yeah, shout out to Cubic AI. this one has been horrendous. I mean, pretty decent technology, a layer 1, layer 2, all of that, EVM compatible, horrendous inflation. Absolutely awful. Zeta chain. Probably one of the worst investments anybody could have made this cycle. But then, it gets more risky. But of course, this is not based on layer 1s alone. Sorry, they are all layer 1s. Everything you see here is a layer 1. And then they get smaller, more riskier. Just really depends what you can tolerate. Yeah. Yeah, it looks like I've just received some breaking news from one of my brothers, and it looks like there might be a de-escalation of the Iran-Israel war, and if that happens, that's going to be unbelievable. Although the conflict's still happening. Meeting in an hour for Iran-Israel. Iran wants to come to the White House. I may do that. I think this is coming from Trump. Ask about Middle East. I don't want to get involved, said Trump. Bullish. So yeah, we need an end to this, guys. Absolutely. So yeah, we hope that war comes to an end, guys, because basically a load of bollocks. Why can't we all live in peace, man? I just don't understand human beings anyway. Neanderthals, that's what we are. Savages. Sonicos say, that's a good one. And then you throw Aptos into that list. I'd probably say Sonic and Say are neck and neck. Now, they both have bullish elements. If I had to get one today, I mean, Say looks to be undervalued. But at $1 billion, Sonic is fully diluted. So yeah, I do believe just Sonic edges it slightly, in my opinion. Plus the fact that they pay developers, but Circle, the other investors will absolutely pump maybe Say. So really just depends on what you're looking for and the type of layer 1 blockchain you want. But both of them will have their season. No, I did like Aptos at one point, and I think Aptos is doing a lot with the stablecoin regulations. I think there's a unit bias there with Aptos, right? $4, $5, $6, whatever it is. The question there is, could it get to like $50? Possibly. They have a lot of money. They have a massive treasury. They're close to the current administration as well. So yeah, it could do well. It's just the fact that, a lot of people just, when it comes to Aptos, people just look beyond the fact that they are this chain with a very good wallet, with credit card and stablecoin integrations. I think what people look at mostly is their decentralization and their TPS, and I don't care, man. Have you got enough money to market this thing? Because if you've got enough money to market anything, sorry guys. So yeah, I do like Aptos, man. But there's what I'm working on. I'm working on this AI thing. It's kind of like AI deepin project. I hope that comes good. As good as like what Prefix has done. Up 40% now. Teraxa is up today at 34%. And then the rest of the market is just chilling. Treasury Secretary Scott Bessent said crypto is not a threat to the dollar. Digital assets are the most important phenomena in the world right now because you keep bugging it. You keep bugging us, man. Brilliant turnout tonight, guys. Listen, it's been a hell of a stream, and I just wanted to thank everyone for the turn up. Much appreciated. Hopefully, we will do another live stream. You guys let me know if we want to do another live stream this week, just to talk and vibe like this. So, any more comments? I think we're good. God bless you all, guys. Man's gonna lock off. Yeah, we at one point we had 1,500, like literally. A majority of the crowd is coming from X. Unbelievable. Big shout out to the X community today. 1,463 people tuned in from X. And YouTube has hardly anything. That's amazing. That is unbelievable numbers. Oh my days. X community, man. What can I say about you lot? Yo, that's mad. Let me big up the X community here. All right, guys. God bless you all. Thank you, Belter. It's been a brilliant stream. Thank you, everyone. Have a lovely night, and definitely this week we will do another show for sure. Good night, guys.